mind sending it to you. Okay. Because normally I keep recording whatever online training I do, and then I send it to the trainees so that in case if they want a recap of anything, they can take advantage of it. Okay. Now, fine. So now since this is a demo session, so I would like to, take some topics which are something which is not a standalone topics. That means something which you can use it in multiple subjects, so that it helps me also, to understand you better, like, whether you are able to get those topics or not. And also you yourself can see whether you are able to, understand. Fine. And in case if
Okay.
you get any questions also, feel free to ask any questions then and there. Feel free to stop me. All right. Okay.
Okay, sir.
Okay.
So now, in your graduation, have you come across to this formula, future value is equal to present value into 1 plus r raised to n? Have you come
Yes.
across to this
Yes.
formula?
Yes.
Yes, yes.
Both of
Yes,
you have
yes.
come across to this
Compound
one.
interest.
Compound interest, correct, correct. Okay. So what I'll do now is I'll just derive this formula, because normally how we train in CFA is like whatever formulas are coming in front of you, you are not supposed to just, mug up just because it has been presented in front of you. You should know the reason, like, why you should believe in that formula, why you should accept that formula. Okay. So normally
Yes.
derivation of any formula I do. So let me do this one as well, because this we will be using this very extensively almost in all the subjects. Okay. So say for example, 100 rupees you are depositing in your bank today, and it is growing at the rate of, or it is compounding at the rate of 10 percentage. So how much will you get after 1 year?
110.
110. Okay. Now 110 you are getting. Now how much will you get, again after 1 year? That means 100 invested today,
121.
121. Okay. Now 121, how did I get 121? Because again I'm compounding 110 at the rate of 10 percentage. Now this
Yes.
is, so that means here, at the rate of 10 percentage comes to actually 10 rupees plus my own 100, so that becomes 110. And then again when it is compounding at the rate of 10 percentage, it comes to 11, and then 110, so that's how it comes to 121. Okay.
Yes, sir.
Now it is for 2 years, so we can probably do it in our mind, and we can say, like, it will come to 121. What if I ask you what will be the amount after 5 years, 10 years, 20 years? And if it is not 100, what if it is 5,000 rupees? Then it is difficult to calculate,
Yes.
right? Then we need some sort of formulas. So now let's come to the formula. So how do we derive this formula? See, now first 100 is becoming 110. That means 100 plus 10 percentage of 100. That means 100 into 10 percentage. Okay, that comes to 110. Is this step fine?
Yes.
10
Yes.
percentage of 100. Any step that you don't understand, please stop me. Okay. Now from here, I'm taking the common factor out. 100 is the common factor. 1 plus 10 by 100 is equal to 110.
Hmm.
Okay. And so now 100 into 1 plus 10 percentage is equal to 110. This is, I'm marking as equation 1. Fine. Okay.
Okay.
Then second one is 110 is growing at the rate of 10 percentage. So 110 into 10 percentage. That comes to what? 121. Fine. Now from here, I'll take the common factor out. 1 plus 10 by 100 is equal to 121. So 110 into 1 plus 10 percentage is equal to 121.
Hmm.
So now this is equation 2. Now I'll apply this equation 1 on equation 2. So this 110, I can write in this format. That is what? 100 into 1 plus 10 percentage.
Yes.
And I'm pulling this down. 1 plus 10 percentage is equal to 121. Okay. So I can write this as 100 plus 1 plus 10 percentage raised to 2
Correct.
is equal to 121. So now this is in the format of what? Present value into 1 plus r raised to n is equal to
So
future value.
future value. Yes.
Got the
Hmm.
formula? Now based on this, can I try for present value? What should be the formula for present value?
Present value of fair value upon 1 plus R upon.
On 1 plus R.
Yeah, correct. Okay. So this formula, highly, we are going to use this almost in all the subjects. Okay, you understood this one, right?
We'll get the present value while
Yeah,
discounting
yeah,
it.
yeah. We are discounting it. Okay.
Hmm.
Now I'll tell you what are you going to learn from CFA so that you get an idea exactly what will I get to learn from CFA. Okay,
Yes.
you'll get an idea about it. See, CFA, what are you learning? You are learning about shopping. If I tell you in a very simplified way, shopping what? Shopping about financial instrument. Okay, so what does that mean? So it is very similar to what we do when we go for shopping. We tend to see the cloth, let's say t-shirt, and then what will you do? Whatever the shopkeeper says, are you going to accept it? No, you are going to value from your side. The shopkeeper says 1,000 rupees. Then you will start checking the various benefits of that t-shirt. What is that
Product.
benefit? Maybe the color, maybe the design, maybe the quality, maybe the brand of that shirt. And then, so let me write and explain. So imagine these are some of the benefits that you are going to get. The color, you are going to get the benefit of design. Okay, you are going to get the benefit of quality of cloth. You will touch and see the quality, correct? You can feel the quality. Then brand. Okay, so based on this, you will say like, okay, the price should be like 800 rupees only. I will not give you 1,000 rupees. So it is overvalued. So you will not buy. Or you may even value that as 1,200, which is available for 1,000. Then what will you do? You will grab it because you valued it for 1,200 and it is available for 1,000 rupees. This is what you will do. The same thing only what we are going to do in CFA as well. Here the product is financial instrument. So in this case, let's say for example, it is a bond. Okay, so now I'm not going into the details of what is bond and all those things right now. What bond means? Bond means what? Bond means it's a loan taken by a company from the investors. Okay, very shortly I'm telling it's a loan because my focus is on the mathematics. Okay, finance anyways you will understand. If you are good with mathematics, finance will not be that difficult to understand. Okay, so
Hmm.
let's say a company has borrowed money and this is a 4-year bond. 4-year bond. So company has borrowed money and promised to repay after 4 years. For which company said, I will give you coupon. Coupon means interest only. Interest is let's say 10 percentage. Company says I will give you 10 percentage. In the market interest rate, it is called interest per year. In the market, it is 8 percentage. Okay, why do we need to know what is happening in the market? It is just like if in this shop it is 1,000 rupees, I would also like to know what is the price in the next shop. I can
Yes.
say that also to the owner, right? That look, the
Hmm.
same product is available in the next shop at 900 rupees. Why are you giving me at 800? So interest in the market is 8 percentage. Then this is the face value or future value, anyways, you can say. Let's say it is 1,000 rupees. Now these are the given conditions of the product. Now, what is the present value of the bond? So how do I value this bond? Okay. So what are the benefits? Like for the t-shirt, the benefits are color, design, quality, and brand. Similarly, for this bond, what are the benefits? So I'm going to get coupon of 10 percentage. So 10 percentage out of 1,000. So 10 percentage of 1,000 comes to what?
100.
100.
100. So I'm going to get the cash flow of 100. This is my benefit here. The next year also I'm going to get the cash flow of 100. So I'll give this is the timeline. Okay, so I'll put the time here. 1 2 3 4 years. So I'm going to get each year 100 100 and then at the end I will get the principal amount also, which is 1,000 rupees. So these are my color, design, quality, brand. So I'm going to get all these benefits. If these are the benefits I'm going to get, how much should I pay now? So what am I doing? I'm valuing this bond valuation. So how do I value? I'm standing here. Okay, I'm standing here. So I'm going to get 100 rupees next year. So this becomes my what? Future value. If this is the future value, what did we learn? The present value is what? Future value divided by 1 plus r raised to n.
Hmm.
So this is the future value divided by 1 plus r is what? R means what? R is the market rate. So in the market, what is the rate available? So in the market, it is 8 percentage. So 8 percentage raised to 1 because it is 1 year away. Understood this one?
Yes.
Yes.
Okay, now this has to be done in the calculator. Okay, this has to be, so what I'll do is I'll just open one soft copy of the calculator, because I'm assuming you don't have the actual calculator with you. Do you have the actual, the calculator that is allowed for the exam is not that Casio calculator and all that stuff,
Scientific and norm.
not even scientific. It is called as BA2, because there are many scientific calculator available. BA2 plus, only this one is allowed for in the exam. Okay, BA2
Acha.
plus, you can search it in the app also, you will get this one, BA2 plus, in gray color it will come out. But now what I'll do is I'll just show you the soft copy here itself. Here, if you go to, so that you understand how to use the calculator as well. Okay, so this is the link. Okay, ba2 plus.com. Okay, ba2 plus. Now this is the calci, and this is the only calci that is allowed. Okay, so in case you enroll for CFA, you have to buy this calculator. Okay, it comes to around 3,300 something, around that. Okay, so now how do I value this? See, okay, so how to value this? First, I'll solve the denominator. Okay, so denominator 8 percentage plus 1. So 8
That
percentage,
1.08.
yeah, 1.08. So I can directly write as well 1.08 raised to 1. Now raised to, how do I do? Raised to is this one, y raised to x. Okay, so y raised to x 1 equal to 1.08. Now I have solved the denominator, but then the denominator means what? I want 1 by x's value. I have solved the
Divide
value
equal
of
to.
x. Yeah, so what I do, in the calci we have one automated one, which is what, inverse of x.
Acha.
So when I click on this inverse of x, it will solve this automatically and give me the value, which is what, 0.93.
Okay.
0.93 multiplied by 100,
100, 90.
multiplied by 100, that comes
93.
to 93. 93, it is all decimal stuff. Okay, so 92.59. So now this store one acts as the memory. STO is there, you can see, right? This acts as memory. So memory store one, I have stored it there. Okay, so in case this is for clearing, if I want to get back that number, I'll do recall 1. Fine, store 1, recall 1. You can keep storing, store 2, 3, 4, 5, 6 till 9, you can keep storing. It's like memory. Okay, I believe you people use Casio, Calci, all those things, right, in
Yeah,
your college.
Yes.
Yeah, so
Yes.
there also you will have memory, right?
yeah,
You
Yes.
have memory, same one. Here we call that a store. Okay,
Hmm.
then the second one. So that means for this 100, how much should I be willing to pay now?
93.
92.59.
Yeah,
Hmm.
92 point.
Yeah. And then, see, this sum can be done in a shortcut way also, but then I'm telling you the long cut way first, so that you get to know the background idea rather than just simply telling you the shortcut that look, click, click, this thing. Then you will not know what is happening at the background. Then the
If the
imagination will not happen.
if the cash flow is same only, then we can only multiply it by the sum value, na? The end value we can get it.
Same, but then the time is different. That is the problem. So there is a difference between getting 100 after 1 year and after
Hmm.
2 years and 3 years and 4 years.
Acha,
So the
every day
time
का
is
time.
different. So the
The
value will differ.
total value we can get by multiplying the sum only. Sum of the factors.
Total value by multiplying, but some
100
of the
by some of the
present
value.
value, some of the
Yeah,
present
yeah,
value, all the
yeah,
present value we will add up.
yeah,
Okay,
yes, yes.
we'll add up all the present value. Now, second one, also in the same way, I'm going to discount it, but this is for 2 years now. So how will I do this now? 8%. So this is 1.08 raised to 2. So 1.08 raised to 2 equal to 1.19, and then I will do inverse so that I can solve for 1 by x. Okay, so inverse into 100, which is what, 85.73. Store 2. Is this okay? Store 2.
Yes.
This till here it is fine, right? So if I want to get back that number, see, this recall 1 was 92, clear, recall 2 is 85.
Store 2 is like M plus, na?
Yes,
Yeah,
memory.
MRCM plus.
Yeah.
Haan.
Okay. Third one also in the same way, 1 plus 8 percentage
Hmm.
raised to 3. So raised to 3 is so this one 1.08 raised to, okay, y raised to x 3 equal to 1.26, which I will inverse it and multiplied by 100. 79.38, which I will keep it in store 3. So 79. Okay, so this is 79.38. Recall 2 was 85.73. Then recall 1 is
92.
92.59. Okay. Then the last one, 1 plus 8 percentage raised to 4. So raised to 4. So that will be 1.08. 1.08 raised to 4 equal to inverse into, now this time you need to be careful, 1100 you are going to get. So into 1100. Okay, so that gives me 808, store 4, 808.53. Now I need to add all this. So I will do recall 1. Okay, first number plus recall 2 plus recall 3 plus recall 4 equal to 1066.23. Okay, so the right price for this bond is 1066.23. In case if it is available in the market at 1050, what should I do? I should grab it because it is undervalued. In case if it is available in the market at 1080, then what should I do? I should not buy it. Why? Because it is
Overvalued.
overvalued.
Overvalued. Yeah.
So this is about one simple example of your bond. Similarly, we will be learning about how to value equities, how to value derivatives, how to value various other instruments. So, and to value all this, we will be using some other instruments. Instruments means what? Some other tools, because of which we have subjects like quantitative methods. These are all the tools: quantitative methods, economics. All these are the tools. The products are equities, derivatives, fixed income, alternative investments, portfolio management. All these are the products. We will be valuing all these products using some of the tools. You got the idea what CFA is all about, what you will be learning in CFA? It is
Yes.
all about shopping financial instrument, as simple as that. Okay. So now here I have found out, it's like college perspective. If I say, it is like finding the value of x. So am I going to find out only the value of x? No, it is beyond that. Beyond that means what? We will see how the money movement is also happening. So I'll give you that example as well. But before that, this is how you are supposed to value your bond. If I want to use the shortcut to value this, will I take so much of time to do? Actually, no, it will hardly take 10 seconds to do this sum actually.
That
So I'll tell
formula.
you I'll tell you the shortcut method used in the calci itself.
Hmm.
So in the calci, this third row is called as TVM function. Can you see that yellow color?
Yes.
TVM function. So let's see how to utilize this one. NIY, IY means the market interest rates. Okay, present value, payment, and future value. Okay, so N means number of periods of compounding. Okay, so number of periods of compounding, it was for four
4
four
years.
times it was compounding, right? So 4. Then IY is
8.
8. We don't have to type. Achha, I'll show it here. See, first is 4. First you have to click the number and then the required field. Okay, so 4n. 4n. Then IY is 8. Now the system knows that it is percentage. IY means interest per year in the market is percentage only. The system knows it.
Okay.
So you don't have to click percentage. You just have to type 8. If I'm going fast, feel free to stop me. Okay.
No, sir. It's
Yeah.
perfect.
Okay. Then present value we will calculate at the end. Based on all the ingredients, we will calculate the output present value. Payment is what? Payment means an amount which we repeatedly keep getting. That means what? 100, 100, 100, 100.
Cash flow.
Cash flow. Yeah. So 100 is the payment. Okay. And then future value is this 1000 rupees. So I have keyed in all the data now. Based on this data, I will instruct the system to calculate the present value. So all I have to do is, after keying in all this data, I will say calculate. That means compute present value 1066.2423. That is all fine. Okay, so this is how practically I'm going to do, but I didn't tell you this first because I wanted your mind to think like how we are arriving to that number.
Hmm.
That imagination development is extremely important rather than just mechanically doing it. Okay, you got the idea,
Yes.
this
Yes.
one. Okay, now if I, so this is one hint for you. Suppose suppose let's say there is another bond. Now this time probably I'll do the shortcut, then see, 4-year bond. Okay, very similar to the previous one.
Hmm.
Okay, this one is 4-year bond. So 4-year bond, coupon is 10 percentage, and this time let's say IY is 12 percentage. Last time it was 8 percentage. Okay, last time it was 8 percentage, now it is 12. See what it means, why it is more than 1000. Reason is it is giving you more. It is like iPhone is giving more than what the market is giving, so the market is ready to pay premium amount. Similarly here also, in the market it is 8 percentage, but this bond is giving you 10 percentage, and that
10%.
is the reason market is willing to pay premium. 66 rupees extra they are paying.
Hmm.
Now what if the market is paying more, but the coupon is not paying much, like it is like Oppo, let's say. So now what will happen, let's see. Okay, so the market is paying 12, but this company is paying only 10. Then how will you value? Okay, so again I'm drawing the timeline. 1 2 3 4. So here cash flow will be what? Again same 100,
Yes.
also 100, 100, and then 1000. Okay, so discounting at 12 percentage. Okay, now I'm not calculating this very manually, because otherwise you might get bored. Then what I will do is I'll use the shortcut now. Okay, now shortcut NIY, present value, payment, and future value. N will be what? 4.
4.
IY will be 12. In the market it is 12. Present value I need to calculate. Payment will be 100. Future value will be 1000, right? So now I'll clear this. See this now. N is what? 4. So 4N. IY in the market it was 12 percentage. So 12 IY.
Yeah.
Okay. Then present value I need to calculate. Payment is 100.
100.
Future value is 1000.
1000.
Compute as in calculate present value, 939.25. So if you calculate all this, it will come to 939.25.
So it's overvalued.
Yes. Now why it is lower? Because again, one logic is because it is giving less than the market.
Hmm.
This one, this two. And also, if you now let's try to compare between two questions. If you see, the previous question also was more or less similar. Where is that question gone? Yeah, here. It was a 4-year bond. It was coupon was 10 percentage. Future value was 1000. Only the only difference is interest per year. In this case, it is 8 percentage, and the next case it was what, 12 percentage. That is the only difference. Rest all are same. That means, so what is the takeaway point? The takeaway point is when the interest rate in the market went up, the bond price came down.
Acha.
So that sort of learning also you will find in CFA, which is all about the movement, how the values are moving. Okay, based on other variables. So in this case, based on how the interest rate is moving, the values are moving. Okay, so that means another conclusion is, the relationship between interest rates and relationship between interest rates and bond price. So that means when the interest rate is going, in this case, what happened? The interest rate went up, right? 12. So when the interest rate goes up, the bond price comes down. Okay, this is the relationship. And vice versa also. When the interest rate comes down, bond price goes up.
Hmm.
This is the takeaway point. You got some idea?
Yeah.
Yeah, okay. So this is just giving you hint like what you will be finding in this CFA. Okay. Then let's say, and by the way, fixed income, this comes under fixed income subject. That is one of the toughest subject, okay, in CFA. Then let's say, um, let's say semi-annual bond. So I'll make another question. 2-year bond, many varieties you will get. Okay, coupon
Hmm.
is 10 percentage. IY is, let's say, 8 percentage per annum, paid semi-annually. Sorry, not this one. This is 8 per annum, paid coupon is paid semi-annually. Future value is 1000. What is the present value? Now let's draw the timeline. So this is for 2 years. Coupon will be paid how often? Semi-annually.
Yes.
Twice a
Semi-annually,
year, right?
yeah, twice a year. So how much will they pay each time?
50 rupees.
Exactly, 50 rupees, right? So 10 percentage of 1000 comes to 100, and so half will come to 50. So this is the cash flow,
Hmm.
and then finally 1000. Now, if I have to discount this, how will I discount? What do you think? Try 1 plus. What should I write here?
20%.
No, not 20.
Into 2 we do, na?
No. See, this is for half a year.
Acha.
This is for one. This is for 1 year. Ideally, we
Yes.
should take IY, right? Now you think.
Yeah.
So this is for half a year. This is for 1 year. So what should I do now?
Take 4%, right?
4 percentage,
Hmm.
right?
Hmm.
Okay.
Hmm.
So it is 8 percentage divided by 2. It is
Okay.
4 percentage only, but I'm writing here so that you know how we are
Yeah.
getting that 4 percentage.
Okay.
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 This is one time 4 percentage. Can you try now for the second one?
Same, na? You'll take 4%
Yeah,
only.
Ha. And
because the
then
period is same only. No?
Hmm.
now this is 1 year away. So this 4 percentage is happening 2 times now.
Yes.
So it is raised to 2.
That
Just
power
what the
is
logic.
number of installments, na?
Yes. So this is 1 and this is 2 times 4 percentage, 4 percentage, 2 times we are
Yeah,
discounting. Okay.
but
Then third one. Now try this one.
this will be raised to 3.
Yes, exactly.
Hmm.
Raised to 3.
And then 4.
Yeah, correct. Okay. Okay. So this is what we have to do. Now if I use shortcut, then it will be NIY, present value, payment, future value. Okay. So what should be N over here?
And it's 2 years.
No, N is 4. Number of
4,
years of
4.
compound.
Number
Number
of
of
payments,
installments.
acha, okay. Number of
Okay.
payments and number of
Yeah.
installments.
And IY is what? IY is only 4.
4.
So 4. Present value I need to calculate. Payment will be 50.
50. Correct.
Okay.
Hmm.
So I'll use this. Okay. N is 4. N. IY is 4.
Yes.
Payment I need to calculate. Sorry. Present value I need to calculate. Payment is 50. And then 1000 is the future value. Compute present value. 1036.30.
Hmm.
Okay, 1036.30. Okay, should I do this long cut? You want me to do this?
No, no, it's okay.
It's fine, no? Okay,
It's fine.
yeah. So this is how you are supposed to value a semi-annual bond. Okay, semi-annual bond. Fine. So this kind of calculations will be there in all the subjects. The next one, let's say next one is, let's say effective annual rate. Effective annual rate. So what do you mean by this effective annual rate? So effective annual means what? Effective annual means, let's say there is a bank. Actually, this bank, IDFC First Bank, that is, if you see the ad, have you seen that ad where Amitabh Bachchan and Abhishek Bachchan? I don't know if it is currently going on that ad, but I have seen this sometime back. They both come, on this ad and they advertise about IDFC First Bank. See there, so they are paying you monthly interest. So when they are paying you monthly interest, so yearly what you are going to get will be more than the nominal rate that they quote. I'll tell you what it means. Say for example, there is a bank which says I'm paying you 10% per annum compounded semi-annually or compounded annually. Normally, if nothing is mentioned, it means compounded annually only. So that means if it is 100 rupees, it will become what?
10%.
110.
Then it
110.
will get compound. Next year 121. Correct.
Now, if your bank says, I'm going to pay you 10% per annum compounded semi-annually.
6 months, man.
So now you tell me this is 100,
Hmm.
this is 0.5, and this is 1. So
Hmm.
how much will it be after half a year?
10, 5%. It would be 105.
Yeah, because it is per annum 10, that means for half a year it will be 5%.
5%.
So that will come to what? 5 rupees, and then your own 100,
Huh.
so 105.
Now
And then again,
105 ka
Then
5%.
105 will get reinvested, so compounding the benefit.
correct.
5%.
Okay, so that comes to what? 5.25 if you calculate this, and then 105, so 110.25.
Yes.
So effectively, after investing 100, how much are you getting after 1 year? 110.25.
110.25.
Yeah,
Yes.
that means it is 10.25 percentage.
Yes.
Okay, then effectively, this is called effective annual return. Okay, effective annual return. So now, because it was 100 rupees, it was easy for me to calculate.
Yes.
So otherwise, if this would have been 5,000 or 20,000, it would have been difficult.
Yes.
So that means I need a formula to calculate this effective annual return. Okay. Did you have this time value of money subjects in CA or in
Yes,
college?
yes.
Yeah.
So you have been through all this effective annual return.
Yes.
You have been through, right? Okay, good. Where in CA or in college?
CA.
CA
CA.
Foundation.
CA Foundation. Okay, fine, good. Then, yeah. So now let's see what is the formula. So you know the formula for this effective annual return?
I don't remember it.
You don't remember?
We
Okay,
don't
no
remember it,
problem.
but we
Okay,
have gone through it.
okay, no worries. See this. So let me again derive the formula. Okay, so this is the base. Future value is equal to present value into 1 plus r raised to n. Fine. Right now, my focus is on the returns, not on the present value or future value. So let me make this present value as 1 rupee so that it goes away. Okay, so 1 rupee, it goes away then. Then I will be left out with only this one only, 1 plus r raised to n. So let me play around with this formula only. So 1 plus r is what? 10 percentage, because that is the nominal yield quoted by the bank. Bank initially said 10 percentage only, na?
Hmm.
So 10 percentage, but then I'm going to practically get 5 percentage, right? Twice I'm going to get 5 twice. So this one 5 and this one 5 percentage twice. So that means divided by 2 and then raised to 2. Can you understand this step now? 10
Yes.
percentage
Yes.
divided by 2, that means 5 percentage. That is going to happen 2 times.
Yes.
Okay. So if I calculate, what do I get now? Okay. So this is 10 percentage divided by 2. 10 percentage. Percentage sign is on the left hand side. Okay. Mid left hand side. Divided by 2 equal to. Okay. Plus 1 equal to. That means,
1.05.
yeah, raised to 2. So raised to 2 equal to 1.10.
Hmm.
So 1.10, what does this mean now? 1 point, acha, wait, I have to go for 4 decimal, okay, then only it will come accurately. So wait, I'll just change the format. What I'm going to do, you may not understand now, but that is fine. I'm just
It
going
will
to change
come.
this decimal.
It will 1.10.2. 1.10256. It will go like this.
Wait, I'm just changing this decimal so that I get more decimal. Yeah, now it is fine. See, 10 percentage divided by 2 divided by 2 equal to plus 1 equal to, no, 10 percentage divided by 2 equal to plus 1 equal to raised to 2. Okay.
Yes.
So 1.1025. What
Hmm.
does this mean? Now, these numbers are talking something to us. What is it talking? It is saying, look, 1 rupee will become
If you'll invest
1.10,
1.105, yes.
1025.
Yeah.
But my
Yeah.
intention is to calculate percent. That means per 100 how much it will come to, not per 1 rupee. Okay. So what will I do? I will adjust the formula. I will put minus 1 so that this minus 1 goes away. And I want to include 100 because I want to calculate out of 100. So it becomes 10.25 percentage.
Gold.
You got the idea?
Yes.
Okay, 10.25 percentage. So what is the formula? So this is the formula. 1 plus nominal rate divided by n raised to n minus 1 will give you the effective annual return. Okay, so let's try another example. So let's say 1 plus, let's say a bank is saying 10 percentage paid quarterly. So quarterly means what will come here? Divided by
Oh.
4 and raised to 4 minus 1. Okay, so now I'm blindly just using the formula directly. Okay, so 10 percentage. So that means bank is paying. The question comes like this: bank is paying at the rate of 10 percentage per annum, compounded quarterly. Compounded quarterly. What is the effective annual return? Okay, so this is 10 percentage divided by 4 plus 1. Okay, now raised to 4. Okay, so minus 1 and then finally. So minus 1 when I will do, it will be 10.38 percentage. 10.38 percentage.
Okay.
Got the idea?
Yes.
Okay. Yeah. Okay. Um,
Sir,
fine.
what is the theory part in this course, CFA course?
What is the theory? Okay. So theory, you will have a lot of theory in equity subject, like what is equity, stock exchange, how index is calculated. Okay, market capitalization. Like in India, we follow market capitalization, right? So similarly, there are other ways also to calculate index return. So there is something called price weighted, equal weighted. All those different varieties are there. So different indexes uses different one. So that sort of theory is there. Apart from this, behavioral finance is there, like how your behavior is supposed to be when you are investing. We human being are, we at times be highly overconfident. At times we are very conservative, not ready to change our behavior. So this kind of theories are there. Apart from this, ethics is there. Ethics is full of all theory only. Ethics is just, you know CFS ethics finally will win, because you and I, we both can be ethical, but still our ethics can differ, right? In ethics, what you will learn is there will be a lot of scenarios given. Like for example, you are inside the lift, and suddenly some directors are coming, and then they are speaking, and you got to know some inside information. How will you react? So this kind of, then economics has a lot of theory, which is all about, if you read daily business newspaper, which will be about money supply, then monetary policy, fiscal policy, the budget when you see. So a lot will be covered from macroeconomics point of view. Those sort of theories are there. Then equity derivative is more practical sums only. Then alternative investments, little bit theory. Alternative investments more theory, like some part about hedge funds. Hedge funds, it is covered little extensively. Then some part about Bitcoin and all this kind of stuff, some theory about Bitcoin. Then yeah, so this sort of things are there.
So you will only teach all the subjects?
I will be teaching all the subjects. Yeah.
So what are the subjects in CFA?
So subjects are equities, fixed income, derivatives, alternative investments, portfolio management, corporate issuer. Corporate issuer is all full theory only. Then ethics, economics. Okay. Then financial statements and analysis. Which should be easy for you people, because you are coming with accounting background. Then quantitative methods. So 1 2 3 4 5 6 7 8 9 10. So these all are considered as products. These all are considered as products. These are the tools to understand these products better. These all are the subjects.
And so the exam is MCQ based, right?
All questions. Okay, so all are MCQ only. You will have morning paper and afternoon paper. Okay, morning session and afternoon session. Morning they will ask 90 multiple choice questions. Afternoon 90 multiple choice questions. Morning you will, all these are morning paper, these 5 subjects. Okay, and these all are afternoon paper. And no negative marks. No negative marks. And 3 options for each question, A, B, C.
3 options.
Yeah.
And sir, how's the passing percentage and all?
The record shows for CFA 45% people pass. Around 45% people
So how it's
pass every time.
calculated? Like it's marks based or percentile based?
Percentile. Only the top 45 will be passing out of 100. Percentile based.
Okay.
Yeah.
And so if like suppose we are thinking about the Feb 26 attempt, so what would be the last date to register?
For Feb, it is over as far as I can recollect. Wait, I'll just quickly check.
No, I checked. It's
Uh,
still open. The scholarship part is over, but the for
uh,
registration we can do it.
okay, let me quickly check and tell you the date. Okay,
Yeah,
just give me 1 second.
sure.
Sure, sir.
I'll check and show it to you only. So CFA Institute exam date 2026. Okay. Oops, where is it? So you said Feb 2026, right? See, early bird, one second, let me see. This is Feb 2026. Early registration deadline is over, 7th July. Then standard one will close on 29th of October.
So till 29 August we can register, right?
Yeah,
October.
but the fees will be little higher, okay?
Yeah.
Yeah.
Fees will be this one. See, you have missed this part.
Early bird.
1140. Yeah.
Yeah.
So it will be now 1490
And so
for February.
if we are aiming for the Feb 26 attempt, so when will we start? Like if we are starting classes, so when will we start the classes by?
The moment you are ready, I am ready, because we handle very less number of people only. Okay. So Feb will be like kind of this is August, no? So September, October, November, December, January. So 6 months are there. Because we handle very less number of people, so it is easy to give any additional support if required as well. Say for example, even if I have to make you to sit separately and then explain the foundations and all those things, one or two subjects if I have to explain separately also, I don't mind doing it. Reason being, that will help you to understand better and that will increase the probability of passing. But otherwise, yeah, so that's what I do. So I don't make any trainees to wait, because what happens is people who are deciding well in advance, why should they suffer and wait for other people to decide? So whoever is deciding first, I make them to sit and then learn. Reason being, as a trainer, I am supposed to train whoever is ready with the mindset to learn. So I don't make anybody to wait. The moment they are ready, I directly start the training. The only thing is people who are joining, before, or people who are deciding before, they will get more and more revisions. Reason being, they joined before, and
They
I
joined
keep repeating. As a trainer, my job is to keep on training. So my job is to train also, and also to revise everything. So when I keep revising the stuff again, which they already finished by joining early, so they tend to then get a good recap, and then that
More
gets
clarity.
into their head, more in a better way, and that helps them to clear the exam.
And study material and also.
Study materials, I follow Schwezer books. See, everybody follows Schwezer only. I'll tell you some insights, because here I'll tell you some insights very honestly. See, what happens is everybody uses Schwezer only, but some institutes will say, like, it is their own study material. There is nothing called own study material, because first of all, who authenticated them to create their own study material? Number one. Okay, as a student, you will not think all these things. You will just believe what they are speaking, right?
Yes.
Number one. Number two, imagine if you are running a training institute and Schwezer is authenticated by the CFA Institute, okay? And that Schwezer book is available at the rate of around 1300 rupees, all total 10 subjects, around 1300. Will you use that material, or you will create your own material by paying more to the employees? Lakhs and lakhs of rupees you have to pay, correct? It's not something, I will sit in one corner today and by tomorrow I will create notes and then I will give it to you, because each and every word counts. Each and every word will be so very difficult. Actually, when you see the questions, you will know what I'm trying to say over here. So it is, nobody prepares on their own. All they do is, the only thing is, some people will say the truth and some people will just take the material and then they will put their brand name and then they will say, like, we have created the material. So nobody creates like that. Reason being, just imagine, why will you create your own material, or you will take directly at the rate of 1300 rupees, which is
directly.
authenticated by the CFA Institute.
Yeah.
So this is just the truth I'm directly telling you, because those are all marketing tricks. So which I don't believe in, because I think, like, whatever I'm speaking, the truth, that is better for me. And what I do is, along with Schwezer, then we do all the doubt solving. Doubt solving is the one where all the filter will happen. Okay, so exactly whatever is missed out or anything you are not able to understand, that questions are all given by the CFA Institute only. And CFA has clearly mentioned that if you score more than 70 percentage in your mock exam, you have 2 to 3 times more probability to pass the exam. 2 to 3 times. So what I follow is just whatever clearly CFA is telling you. Why? Reason being, CFA is conducting the exam. CFA is taking fees from you. CFA is going to correct your paper, and CFA is telling you that look, these are the questions. Score this much, your probability to pass will the probability will go up. Then I will listen to all whatever CFA is telling, right?
Yes.
So I don't have to create my own notes because I'm not going to conduct your test. That is the truth. I'm
Okay, sir.
facilitating. So CFA is the one whom I will look up to, and I will follow whatever they are saying. And that is working also very well for me because my trainees are able to easily clear the exam following this strategy. So I don't get carried away with anything else that is happening in the social media and all those things. Just I tell my trainees that stick to whatever CFA Institute is saying. Because simple reason, you are paying money to the CFA Institute and they are giving you all the facilities. As simple as that.
Okay, sir, and if you could let us know one thing, sir. Like, in your opinion, what student is best suited for CFA? Like, what is the interest that a person should have that, in your opinion, he is suited to give CFA?
Yeah, one is if you are interested in very logical kind of things. See, in CA you will have a lot of things to memorize.
Yeah.
Here you will have very less to memorize. That is also only in FSA, financial statements and analysis. Very less to memorize here. Rest everything is logical. So if you are somebody who doesn't like all memory stuff and you are more logical kind of thing, then CFA you will like, because all this will be very logically derived. Everything what we will be doing logically, we will decide whether we should buy or sell. That is number one. Number two, if your plan is to go abroad, all that thing, if that is the case, just 1 minute, okay? I'll just connect my charger to the laptop.
Sure, sir.
1 minute. Abroad. In case if you're planning to, hello, can you hear me?
Yes, sir.
You can hear, right? Hello, can you hear me?
Yes, sir. So your voice is cracking a little bit.
Okay, just you hold on, okay? I'll just just for a minute.
Okay.
Hello.
Yes, sir. Now your voice is clear.
Just 1 second.
Yes.
Yeah. So the question was like, who should do CFA? So say for example, if you're planning to shift abroad, so it is valid across the world. So anywhere you go, finally, the certification is accepted. So third reason is, say for example, if you want to start your own business, so again it will be helpful over there as well. Why so? Reason being, finally we are learning about money only and on analyzing companies. So you will be able to run your own company in a far better way, because you will have the financial literacy. You will know how to manage all the financial stuff of the company, because your company gets failed not because its product is bad. That is the secondary reason, because any bad product also will have a taker in the market. Why a company gets failed is because its finance is not handled efficiently. Like for example, Kingfisher's company got failed not because of product. Everybody is flying, right? It's not that nobody wants to fly or nobody is interested in flying. Then why Kingfisher got failed and why Indigo
Bad
became
financial
a success? It
planning.
is
Over
all about
management,
bad
finance.
financial management.
Over expenditure.
Yeah, financial management. So it is teaching us that financial management. So in future, you want to start your own business, CFA will help you. You want to work abroad, CFA will help you. You are interested in anything related to money management stuff, CFA will help you. So and it is all more logical stuff. So if that is the case, then CFA will help you, because this is very liquid, fungible. That means whatever work you do, finally it is all about money management, right? And that money management teaches,
Is it
CFA teaches.
compulsory to clear all the three levels, sir?
It is not compulsory. Level 1, if you clear also, you will get jobs in the market. Level 2, if you clear, you will get a very good job in the market. But level 3, if you clear, that credibility level goes up. Nobody can dare to question you then. Nobody will suspect your credibility. So tomorrow, if you want to go to the market, raise capital or anything that you want to do, you are putting, you are suffixing your name with CFA. The moment you suffix your name with CFA, that's it. Brand. It's a brand, right?
So this
So
45% passing
hmm.
percentage was for level 1, right? Level 2 and 3
Level
will
2
pick up
also
on.
43. Level 2,
Okay, okay.
2 also around 45. Level 3 is 55 percentage.
Oh. And so we were actually very keen on offline classes,
Mm-hmm.
but because of
Okay.
the time constraint of 4 to 7, we won't be able to be there. So, sir, do you have any other timings for offline?
Like we can come at Charlie Road at any time, sir. After 6 or after 7, we can come.
See, honestly, my evening slot is all blocked highly, because I am only teaching for level 2 also, because my trainees have cleared level 1. They are coming for level 2, and my level 2 trainees have cleared level 2, and they are coming for level 3 now. So that's why, it is all packed. What I can do from my side is, uh, if you are doing this online training, weekend probably, like especially Sunday, if you in case if you want to, in person, if you want to get anything sorted out, I can come over there anyway. Sunday it is adjustable for me, like afternoon or evening, we can meet up, and whatever doubts you have, I can sort it out.
So
That
you don't have
is
a
possible.
morning session, like, because our
Morning session.
offices is at 10 o'clock, so we
Yeah.
can
Before
come
that also we
morning.
can do. Like any
Morning.
time at Charlie Road if you're coming.
Yeah.
We
See,
can.
actually, the problem is morning. I'm not getting students. See, majority people are going to college, right? So
Yeah.
for that
Yeah.
reason, if I
Okay.
start in
Okay.
the morning, I will be left out with only two. Actually, honestly, I would like that one morning,
Yeah.
but then I'm not getting the option for morning. As in, like hardly, see, once in a year, I mean, in a year, like 1, 2, 3 people will say for this, and I don't know when the next student will come and ask for
Yeah. So
morning,
it's a
because
waste
they
of
are going to
resources for you
college.
as well. So yeah.
Exactly. So that is the reason. Um, yeah,
Like so how many people come at you conduct at a time in classes?
very less people. Very less people. Only around 10 people in a batch I take. Only around 10 people. Reason being, this institute is run very passionately. We want to make sure that all our trainees are passing, because we don't want anybody to go out and then speak anything against the institute, because we are highly emotionally connected to the institute. So we want to make sure that the quality is of utmost importance, and that is the reason I don't prefer taking many people as such. Okay, because I believe in individual attention. So whomever I'm taking, I need to make sure that I'm giving that hand holding support till that person clears the exam. And that is the reason they are all coming to level 2. And that is the reason they are coming to level 3 also. Okay. So this is the benefit that we get. So they don't look for any other training institute then. In fact, they bring other people also. After finishing level 1, they bring their friends also for level 2. So that's what we want to, that kind of image we want to create. Not like having a lot of numbers just for namesake, and then hardly anybody is passing.
You don't conduct online classes from this Charlie Road classes, like you're conducting classes from far away from here.
I
Like
do.
if you are taking online classes, we can attend in person, na?
But then see, I don't uh, believe in such kind of training. Why? Then people who are attending online,
Yeah.
then for them, see, first of all, my training there goes till 7 o'clock, let's say. After that, my online training is already at 9 o'clock over here. So if I do that training from Cherny Road, then 9 to 11, if I'm doing, then when will I come back?
Yeah,
And
that's true.
also,
Also.
yeah, and also, uh, uh, somewhere. I prefer like this talking stuff. That means what happens, see, if I'm doing talking as in like the way I'm talking to you now.
Yeah.
Otherwise, what will happen, there will be some system glitches and all those things, and somebody will be like sitting far away. See, I'm talking to somebody who is in front of me, and I'm talking to somebody who is sitting far away. I can tick the box saying like I'm done with the training, but then it will not go very smoothly because the people who are sitting in front of me, the wavelength will be different, and the people who are like far away from me, the wavelength will be different. It will not go very nicely as such. In fact, in my online training, I have only 2 people in my online training. So I take very, very less people even for online also, because I don't, in fact, for online, I really don't think I will ever even take 10 people, because I myself will become uncomfortable then. Because I don't like too many people, and then I don't want to feel that anybody is, like, I don't want to feel that anybody just sitting for namesake and then going away, because
Yeah.
I prefer interacting with everybody. So online training, only 2 people are there, and weekend you can always come, and we can sort out anything doubts or anything you want me to repeat also. I don't mind doing all those things. And also, anyways, these videos also will be recorded and then sent to you as well, so that you can see that as well. Yeah.
Okay, sir.
So quality perspective, you can always call me anytime, you can always ping me anytime, you can always ask me whenever our time matches. Ask me to come to the training center, and we can interact, and I will make sure that quality perspective you are happy and all your doubts are sorted out. That much I can guarantee you, because that is in my control. So what is in my control, I can guarantee you that understanding perspective, you will not have any issues.
Okay, sir.
Yeah.
But so for Feb 26, we are like eligible, like we will be
Yeah,
able to complete our portion and everything
I can finish.
before 26.
Reason being, I don't mind even taking you people separately and finishing couple of subjects. Okay. If required, I don't mind doing that also. So see, not only by me, to be very honest, any trainer will finish the portion. The question is, will you be able to focus? I'm just speaking honestly. Will you be able to focus? Will you be able to practice? If yes, because you are working, right? The pressure will be on you. The pressure will not be on me, because I'm going to train what I already know. So for me, it is just a time pass work, right? What am I doing here? Just I'm speaking just what I already know. So it's, for me, it's just a time pass. But for you, every time when you are learning, you are taking something new. So for
Okay.
you, the pain is on you actually. So give enough time? That question you have to ask to
So,
yourself.
in your opinion, like how much time a day should, like 9 to 11 we'll have the class, okay?
Okay.
Suppose if we have the class 9 to 11, so how much time a day should we give to practicing by yourself?
Okay. Now you tell me, how many hours can you give? How many hours is it possible for you to give?
Like if we are having classes 9 to 11 morning,
Hmm.
max 2 3 hours max.
Then you should give that much time only, because
Okay.
if I say 5 hours, then it will put you under pressure, then you will get into depression. See, you have to enjoy the journey. It is a
So we
very
have
tough
some
exam.
MCQ questions to practice. We have many questions so that we can, after doing the concept, we can practice questions and all.
Yes. Yeah.
So we have
Yeah,
that
yeah, it
amount
is
of
there
time.
in curriculum. It is there in curriculum. I can send
Okay.
you the curriculum. So curriculum is free only. Curriculum, all soft copy, I have. So you can see all those questions, and then you have to. That plays bigger role than the actual training, because training is to build the foundation. Those questions will further build up. Further build up the floor. It will help you to get into tougher questions there.
Okay.
Okay. Yeah. Fine.
Yeah.
Yes, sir.
Okay. Okay, all right then. Okay, so I'll close it over here.
Yeah,
Okay.
sir.
No more questions, right?
No more questions. Thank you,
Okay,
sir.
fine. So I wish you all the best. Yeah.
Thank you.
Thank you. Bye bye. Bye.